One of the co-authors of the paper that made ChatGPT possible didn't actually go to work at OpenAI. Instead, he went his own way and built a blockchain. A blockchain that just processed over $13 billion in cross-chain volume through a single product, achieved 1 million transactions per second, and is quietly becoming the infrastructure layer for AI agents operating on-chain. Their token is down 93% from its all-time high, ranked outside of the top 35 by market cap, and almost entirely absent from the mainstream conversation. I see an opportunity here, and the name is Near Protocol. Stick with me as I break down where Near came from and why it was built the way it was, the tokenomics overhaul that just happened, the real adoption numbers that almost nobody's talking about, and the risks you need to weigh. Of course, we're going to top it all off with the 3 incredible cases for you to become a millionaire with Near. Now, let's get into it. This is not financial advice. Always do your own research. The year is 2017. A researcher at Google named Ilya Polosukhin is one of the 8 co-authors of a paper titled "Attention is All You Need," the research that introduced the transformer architecture, the foundational model behind ChatGPT, Gemini, Claude, and virtually every major AI system in use today. 1 year later, Polosukhin leaves Google to build a blockchain, not because it was trendy, but because he saw a specific problem nobody had genuinely addressed and solved. How do you build a network that's fast enough, clean enough, cheap enough, and simple enough for real users without sacrificing security? The Near protocol is his attempt to solve this conundrum. The project launched its mainnet in October 2020. The core breakthrough is Nightshade sharding, a system that splits the network into parallel processing lanes that scale automatically as demand grows. In late 2025, Near hit a publicly verified benchmark of 1 million transactions per second in a sharded test environment, which was using real Near code, however. A proof of concept that no other chain has publicly demonstrated yet, so that is something that we can admire. Blocks finalize in roughly 1 second, let's say. Fees average a fraction of a cent. That's also amazing. And the chain has run with 0 downtime since launch, unlike Solana. The original vision was user ownership of data, identity, and money. Well, 6 years in, that vision has a new face, I would say. It's AI native infrastructure where AI agents transact across blockchains seamlessly on behalf of users. That's you and me. If you think about it, one of the guys who helped invent the AI revolution is now building the financial rails for it. Well, I guess we're not all created with equal talents after all. Near launched with an initial supply of 1 billion tokens and an annual inflation rate of 5%, which created consistent issuance pressure. I mean, it was barely offset by fee burns of only around 0.1% annually. Well, that changed on October 30th, 2025, when Near executed its halving upgrade, cutting maximum annual inflation from 5 to 2.5%. The staking yield also dropped from roughly 9% to around 4.5%. That's all good, with one complication though. The governance vote to implement this actually failed to reach the quorum necessary. And yet, the team pushed it through anyway. This is something we'll revisit in the risks just a bit later. Just hold on. Afterwards, in February 2026, Near fully unlocked its entire token supply, removing all future vesting cliffs. The current circulating supply sits at approximately 1.3 billion tokens, which is essentially the full liquid float. There are no hidden unlock bombs anymore, and that's a good thing for all of us. One important mechanic is the following. 70% of all transaction fees are burned, with the remaining 30% going to validators. As the Near intense volume grows, so does the burn rate, pushing net issuance toward near zero or even deflationary territory if activity actually sustains. Time to take a look at the ecosystem growth, and this is where we need to dig beneath the surface. Because if you look at the raw transaction charts for April 2026, you'll see a massive drop from over 3 million daily transactions down to roughly 700,000. To an outsider, that looks like a crash. Of course, it does. But if we look closer, we'll see that is a deliberate ecosystem calibration. Near's biggest apps like Sweat Economy and Kai Ching migrated to a batching system that rolls up thousands of microtransactions into one single compressed settlement. At the same time, the end of Here Wallet airdrop campaign actually also purged millions of low-value bot accounts. So essentially, Near effectively traded junk volume for real economic weight. But one couldn't tell by just staring at the chart, let's admit that. The proof for that is in the Near Intents dashboard actually. That's Near's cross-chain execution infrastructure, their flagship product if you like. But what does that even mean? Well, instead of navigating bridges and managing multiple wallets, users simply state what they want. For example, send USDC to this Ethereum address, 10 USDC, and Near Intents routes the entire operation automatically cross-chain in a single step. As of early 2026, Near Intents had processed over $13 billion in cumulative volume, with monthly volume running above $2 billion per month. The AI layer is equally important. Near's AI cloud infrastructure is already deployed with partners collectively serving over 100 million users across multiple platforms. The 2026 roadmap centers on, guess what? AI agents. These are autonomous programs that hold wallets, sign transactions, and interact with any chain without users managing keys or bridges. And if that sounds abstract, remember, the founder of this chain literally helped invent the transformer model that makes modern AI agents possible. Then, on the decentralization front, a 2025 staking program reduced the Near Foundation's share of stake tokens from 63% down to 21%. In the meantime, community-controlled stake grew to over 80% of the network. Now, that's a genuine structural improvement, and I love it. Now, I'm convinced that we need to be aware of the risks of any project we consider. So, let's address these when it comes to Near. Risk number one is governance. The October 2025 halving was a good outcome. I approve of it, sure. But it was delivered through a bad process. The governance vote failed to reach quorum. The team implemented it anyway. Sounds as totalitarian as it gets, guys. If the core team can override a failed vote on monetary policy, this is still a centralized project with decentralization as a future goal. And that's not to be ignored at all. Risk number two is the cross-chain exposure. In late April 2026, Near Intents lost approximately $600,000 due to a Litecoin chain reorganization bug. Cross-chain infrastructure is powerful, truly, but it inherits the risks of every chain it connects to. Just keep in mind that as Near Intents expands, the attack surface grows with it. Risk number three, finally, is the price versus adoption divergence. Near's token declined roughly 50% from April 2025 to April 2026, while on-chain metrics hit all-time highs. That gap closes in two directions. 6 years of history shows Near consistently delivering on technology and under-delivering on price. That pattern deserves honest acknowledgement. Okay, now that we've gone over the risks, let's look at the price performance of the Near token. And then, as promised, the Millionaire math, of course. Alright, so Near launched in October 2020, surged to its all-time high of $20 in January 2022, then promptly collapsed through multiple cycles. Today, Near trades at approximately $1.50, roughly 93% below its all-time high. The uncomfortable truth is that Near has already proven it can reach $20. It did in 2022, before Near Intents and the AI agent narrative even existed. before the chain hit 1 million TPS. In my view, today, Near is a fundamentally stronger network, trading at a fraction of its prior peak. That's why I think it can make you a millionaire. So let's crunch the millionaire math now. Let's take $1.50 as our reference price. In the least optimistic scenario, my bear case, the price gets to $10 per token, where Near simply recovers to half its prior all-time high. That would be a 6.7x move, securing a fully diluted market cap around 13 billion, pretty much in line with where mid-tier layer 1s currently trade. To reach $1 million, you would need 100,000 tokens, that's quite easy to calculate, costing roughly $850,000 today. Meaningful upside, yes, absolutely, but also requiring real capital commitment. The second scenario is my base case, and it brings us to $20. Near Intense scales, the AI agent narrative gains institutional traction, and Near reclaims its all-time high. Over 13x move. FDV around $26 billion. That's comparable actually to mid-tier fintech companies today. And in this base case, you grab 50,000 tokens for a total of 75k right now and wait for the million. That's a compelling risk reward, I would say, and if execution actually continues, it's quite probabilistic. And here comes, guys, the bull case. The most optimistic of them all, and it spells $50 per Near. Might sound a bit over the top at first, I agree, but what if the protocol becomes the default execution layer for AI agents across blockchains? What if chain abstraction goes mainstream? The AI infrastructure story actually commands a premium valuation. And to be fair with you, the way I see it, that premium is reflected in a 33x move, shooting FDV up to approximately $65 billion. Still well below BNB's current valuation, just for example. You would only need 20,000 Near tokens at the cost of about $30,000 today. And yes, that's aggressive, but still not really detached from the fundamentals if 100 million AI native users actually start transacting on-chain. In order to reach these millionaire heights, however, we need something to push us there. Well, the way I see it, two catalysts stand out above the rest. First, the AI agent economy. The next crypto adoption wave may not come from retail traders like you and me. It may come from AI agents that autonomously manage wallets and execute cross-chain transactions on behalf of users. Near is arguably better positioned for this than any other layer 1 because its founder helped build the technology that makes these agents possible in the first place. And the second catalyst is the chain abstraction at scale. Near Intense is already processing over $2 billion per month in cross-chain volume. As users increasingly demand simple, one-click experiences across chains, the protocol that invisibly routes those transactions actually becomes essential. Just think of it. Every new chain added to the Intense solver network increases Near's value through network effects that are already compounding and evolving. So, is Near Protocol the chain that quietly built what everyone else only promised? The intersection of transformer-era AI credentials, chain abstraction infrastructure, and a halved inflation rate, all at 93% below the all-time high. That's either one of the most interesting setups in crypto right now, or a value trap for the patient. Now, I want to know where you stand on Near, guys. So drop me your price predictions for 2026 in the comments below, and let's see if any one of us hits the bullseye or we're all so far off. Well, if this analysis on Near helped you, then like the video, subscribe to the airdrops.com channel, and share it with someone who's been sleeping on Near. Thanks for watching, and I'll see you next time. Ciao.